Now, if virtual currency has no physical existence, which it doesn't, how do you know that you own it? Right? Now, I know that I own the money in my bank account because my bank statement tells me I do. That's about the only way I know. How do I know if I own virtual currency? And the answer is a stream of numbers called keys. There are public keys, which are part of the blockchain, part of the public ledger that's out there for everyone to see. And there's a private key that only I have that allows me to access it, spend it, move it, trade it, whatever. Whoever owns the private key really owns the currency. Now, the problem with these private keys is that by and large, people tend to store them on their computer because it's easy. Okay? Now, and the problem with that, of course, is that if your computer gets hacked, those private keys now belong to whoever hacked your computer. So mobile phones in particular are a risk because the mobile phone is often tied directly to the virtual currency exchange. When I bought my Bitcoin through Coinbase.com, what they do is they send, as a double check, they send a code to my phone, okay? And my phone, provides a number that then I double check, yes, it is me, and yes, I do want to move this money. So if my phone gets stolen, I'm certainly at risk for someone being able to get into my Coinbase account and hack it. The way around this, and people who have serious money on exchanges do this, is what's called cold storage. Rather than have their private keys stored on an exchange, they'll actually either write it on a piece of paper or put it on like a separate disk and then lock that in their safe deposit box. And of course, that's the right way. That's the right way to hold these private keys, and that way you're not susceptible to hacking. Now, the same thing is true of the money in your bank account. I don't know if there's anyone in existence anymore that hasn't had someone manage to get their debit card numbers or lucky guess their debit card numbers and take some money out of the account. The difference is that the bank is going to protect you. The bank is sitting there saying, okay, we'll make good on that because we know it wasn't you. And there isn't anyone overseeing that and helping us out with the virtual currency accounts. Okay, virtual currency. Change of value. Now, Bitcoin, Ether, and Litecoin were probably the best possible investments that you could have made in the past several years. Just in 2017, just in this year alone, the price of Bitcoin was about $1,000 on January 1st. It was big news on January 1st that Bitcoin had broken $1,000. And as I'm recording this, the price of Bitcoin is almost $6,000. So smoke and deal. Okay, don't we all wish we'd invested back then? So you can see as of September, just a month ago, it was $3,700. If you bought $27 worth of Bitcoin back in 2009, it'd be worth almost $1 million a month ago. Now, new cryptocurrencies, virtual currencies, are being created all the time. I'm talking a lot about Bitcoin because that's kind of the one everybody knows. When you say virtual currency, you're going to hear, oh, you mean Bitcoin. Yes, Bitcoin, but there's almost 1,000 of them coming from all over the world. Countries are even creating their own currencies. Even Amazon. If you look at this slide, the middle, just toward the right, is kind of a gold-looking thing that says 1 in the middle. If you look at it carefully, it says Amazon Coin. Amazon created their own virtual currency. The idea being that it's easier to spend virtual currency than real money. Which is a scary thought. So an Amazon coin is worth a penny, always and forever. It's not tied to supply and demand. It's just worth a penny. Different countries, as I say, are putting out their own virtual currencies all the time. So you'll hear people talk about virtual currencies that you never even heard of. But there have always been a lot of different currencies. This is not an unusual situation. This is standard. In medieval Europe, in even one country, they'd have 20 different kinds of currencies because each little province would create its own currency with the picture of their ruler on it. This is very standard, so it's not a bad thing that there are a lot of virtual currencies. Now, the question a lot of people will ask is, but is it really money? And that sort of begs the question of what is money? This is where we get into, economist theories. Economists talk about what is money. These are three commonly accepted ideas of what money is. So I have a second major in economics, so to me this is all really interesting stuff. First off, it's a medium of exchange, meaning that we don't have to barter goods and services. We use money. And a lot of people think, well, that's all that money ever really was a way to avoid barter. So I don't have to say, look, I'll do your tax return in exchange for 6 barrels of corn. And the guy said, well, I don't know, I don't have corn, but I have wheat. And I say, well, I don't want wheat, I want corn. So then he has to go find somebody who's willing to exchange wheat for corn, et cetera, et cetera. So what does money do? It allows us to make transactions very easily. And of course, that's very important. Now, a second factor when we talk about whether or not something is money is it an easily understood and shared concept of value? Now that seems, what does that mean? What it means is this, is that if I say this costs $500, you have an idea of its value immediately. If I say, well, this costs 3 goats and 2 bushels of corn, you're going to scratch your head. Well, what does that mean? Well, what's that? Well, it's less than a car, but it was more than a ream of paper. I mean, there's no way of understanding that. So when we talk about a fiat currency like the US dollar, it's very easy for us to understand and share this is the value of this item by just relating it back to dollars. And finally, money is a store of value. It lets us store value for future needs. So how do I, as an emerging society, allow my citizens to store value for when they need it? Like, it's harvest time. We have lots of stuff, but in the winter we're going to have less stuff. So how can I store something, store value, store goods, so that I can have it when I need it? Well, the obvious thing is storing food. The problem with storing food is bugs and mold. So it doesn't last long, right? The problem with storing gold is that if all you have is gold, it's hard to eat, okay? So something like money that we can use to purchase anything is a good store of value. That's how we store value. We save money. We don't save bushels of corn. We don't save, replacement car parts. We save money. Now, is virtual currency money? Does it allow us to exchange, make transactions? It does. A lot of places are accepting virtual currency. Is it an easily understood and shared concept of value? Yes, except we're still thinking in US dollars. So if I say I'll give you a Bitcoin for that, you've got to scratch your head and say, what's a Bitcoin worth today? Is it a store of value? Well, at this point, it's been a great store of value, seeing how the price went up. But what about 10 years from now? Nobody knows. So is it money? It's not. I would say at this point it's not money. And by the way, the IRS agrees with me. Okay, what the terms you're going to hear when you talk to clients who work with virtual currency is digital, virtual, and crypto. So let's talk about what are those mean? What are the differences between them? 95% of the currency in the world is digital. When I say to you, how much money do you have? And I say, really, really, how much money do you have? Open your wallet and show me how much money you have. You probably don't have a lot. Okay, maybe you've got $20 in your wallet. That's the non-digital currency that you have. So how much of that is running around in the world? Not that much. People don't use a lot of cash these days. 95% of the currency in the world is digital. It has no existence outside somebody's bank account or investment account, whatever. Okay, now a subset of digital currency is virtual currency. The virtual currency has no existence outside the internet. So here's the difference between digital and virtual. Digital has existence in your bank, right? Or in the stock exchange. Virtual currency has no existence outside the World Wide Web. So games, and we're going to talk more about games in part 3, World of Warcraft, Second Life, etc., have their own virtual currencies. They're virtual, not digital, because they have no existence outside the internet and by and large outside that gaming platform. It's very important to notice that the IRS uses the term virtual currency. Okay, not digital, not crypto, virtual. So what is cryptocurrency? Cryptocurrency is really what we're talking about when we talk about Bitcoin or Ether or Litecoin or any of those. It uses cryptographic proof methods for minting and control. Okay, so we're using the term virtual currency throughout this class because the IRS uses that term, and we're here to talk about taxes, so we're going to fall in line there. But most of what we're going to talk about in this class is actually cryptocurrency. Now, one thing you're going to want to know about cryptocurrency is, it's based on a programming protocol, and periodically there are updates to this protocol that create what are called forks. That's the technical term that's used in virtual currency world. So there's hard forks and there's soft forks. A hard fork in cryptocurrency means that there's an upcoming software update that's going to conflict with older versions, and the users have to ensure that their software is going to run the update. After the fork, there are two different versions of that currency. Right now, for example, there are 2 types of Bitcoin. Very shortly, we're going to have 3 types of Bitcoin. A soft fork is an update to the protocol that doesn't conflict with the current version. Nobody really has to do anything. It's just a protocol update. And I only bring this up so that when your clients talk about before the fork and after the fork, that you have some idea of what that means. And that's really all you need is some idea. Now, you hear people a lot talk about, isn't Bitcoin a bubble? And the question is, what is a bubble? And, what does that really mean? So the tulip craze is the example that you hear people use. And there was a movie about this recently. The Dutch Republic in the 17th century went crazy for tulip bulbs, okay? And tulip bulbs were being traded for like small farms, okay? Now a tulip bulb is only worth so much, right? And so that's what we call a bubble, is when there's traded an asset at a price that exceeds the asset's intrinsic value. That's a bubble. Now, a disruptive technology is a different thing. And these are kind of the 2 things that we need to look at. An economic bubble versus a disruptive technology. Excuse me. A disruptive technology is a technology that displaces an established technology and shakes up the entire industry. It's a groundbreaking product that creates a completely new industry. Now, this term was first coined by a Harvard Business School professor named Clayton Christensen. He wrote a book called The Innovator's Dilemma, and he talked about disruptive technologies. Examples were, in the .com era. We called that a bubble, but really what it was a disruptive technology. The world completely changed. There were survivors, Amazon.com. Don't you wish you'd bought that back in the early days? But what it was not was a bubble. Okay, there was not an asset that was being traded at a price that exceeded the asset's intrinsic value. So we had survivors from the .com era. We expect the same from this virtual technology. Virtual technology, blockchain technology probably is a disruptive technology. We don't know who the victors are going to be. Should you put your money on Bitcoin? Should you put your money on Ether? Nobody knows. Just as back in the days of the .com era, it was hard to tell who the survivors were going to be. Now, if at this point you're scratching your head and saying, I really don't know what's going on here, Amy, really that's okay. Because the fact of the matter is that you just need to be the tax expert. You just need to know enough about virtual currency to kind of lisp your way through Tiger and ask questions when you need to. Your virtual currency clients are always going to know more about this than you do. You're always going to know more about the tax implications of virtual currency, and that's fine. That's exactly how it's supposed to be. So all you have to know, and my goal over this three-part course, is to teach you enough to know what questions to ask, to understand what the tax law is that applies to that situation, and be able to fill out the tax return correctly. That's all we're going for here. We're not going to turn you into IT experts.